Hello, everyone. My name is Daniel Medmoni Ziegler, and in today's presentation, I'm going to talk about foreign direct investment in Israel, whether or not it's worth it. This is an assignment for International Finance 413, instructed by my professor, Dr. Corey Cole. A little background about the country. So population, Israel has roughly 9 million citizens. Depends on the year, on the season, on the day. The capital is Jerusalem, and the business hub is Tel Aviv City. I'm sure many of you have heard of Tel Aviv City. It's a pretty diverse country, so there are more than 3 religions in the country. Mediterranean climate, so it's pretty warm and nice in the country. And the currency used is the NIS/ILS, also known as shekel. About the currency, it has been in use since 1986, was changed 3 times, and the exchange rate is 327 shekels per $1. This is based on May 5th, 2021. It's a managed float currency system, so the government can intervene if it deems it necessary to intervene and influence the exchange rate or the currency. It's considered a pretty stable currency, even a strong currency, especially when we compare it with the US dollars. Obviously, it's not as strong as the US dollars, but we'll touch about it very shortly. And this is an article by Livingston from Bloomberg. He asks, just how strong is the shekel? In historical terms, very. The shekel is about 1% from crossing a 24-year high against the dollar. So the shekel appreciates against the dollar, and the dollar does the opposite. It depreciates against the shekel. Now, this is a graph that shows the exchange rate in terms of shekels per US dollars. And we can see that the exchange rate has been roughly around 3.5 to 3.8 Israeli shekels per $1, at least in the past 10 years. And we can see at least, for example, 3.5, we can count 1, 2, 3, 4, 5, 6, pretty much 7 times. 3.6, 1, 2, 3, 4, 5, 6, 7, 8 times, and so on with 3.7 and 3.8. So it's fair to say, or safe to say, that the exchange rate has been roughly between 3.5 and 3.8 shekels per $1. This is also a scatter plot that shows the exchange rate and the percentage change in the exchange rate. So basically, we can see how much the exchange rate, the Israeli shekel per $1, how much that exchange rate has changed percentage-wise in the past 10 years. We can see that many of the points are centered or are scattered around that red line, which is good. Obviously, there are some outliers, but many of the points are scattered around that red line. And in fact, the range is within positive 2% and negative 2%. So it's very close to the red line, which means that the exchange rate has been constant, and it is easy to predict the exchange rate for the future. So if a company wants to conduct businesses in Israel, that company can, I guess, predict or forecast the exchange rate with great certainty, because there haven't been many fluctuations, or at least extreme fluctuations, with regard to the percentage change of the exchange rate. So it's been pretty much consistent and constant around 3.5, to 3.8 in the past 10 years, which is a good detail. This is a consumer spending table that I found on Macro Trends, and we can see that over time, the Israeli consumer has increased his or her spending, which is good from a foreign direct investment perspective. The company wants that the residents of the country in which that company invests, it wants that residents to spend money and to go out and buy and purchase goods and services. So the Israeli consumer loves spending money, and we can see it here on the graph. As for the balance of payments, this is the current account. Although there are some fluctuations, so it goes up and down, up and down, it has been positive since 2009. So the implications of that is that Israel has a positive net trade. So it exports more than it imports. So more money is coming into the country than is leaving the country when we talk about trade. So it's a really good sign. It might even be the case that Israel does not depend on imports, on trade from other countries. As for the financial account, again, some ups and downs, fluctuations, but the takeaway is that it has been positive as well from 2009 throughout 2019. It means that more investments and cash inflow is coming into the country than leaves the country. So those investments, we're usually talking about assets in foreign or domestic assets, and could be people who invest in Israel or deposit money in banks in Israel, or Israeli residents and citizens that invest overseas and earn money and bring it back. So more money inflows into the country than outflows out of the country, which again is a really good sign. As for the capital account, this account has been more stable, less fluctuations over the year. And once again, we're talking about a positive account throughout the years from 2009 to 2019. The capital account is basically transactions between countries, and those transactions originate from things like trademarks, copyrights, patents, tangible and intangible assets. Once again, it's a good indicator that the balance of payments in Israel is positive. So Israel does not owe money to countries, at least in theory, and it has more money than it spends money. So basically, we're talking about uh, um, surplus budget, not a deficit, not a budget deficit, a budget surplus, which is a good sign. More money in the country than money leaving the country. So risks, investing in Israel. So we're talking about basically 4 to 5, sometimes even more risks, but the most common one are economic, political, currency exchange rate, and countries risks. So the economy of Israel has been pretty stable over the years, and I'm going to talk about it shortly. We also saw when we talked about the exchange rate between the Israeli shekel and the US, how it's been constant, and it's good. It means that the economy is pretty much stable. We can also see the graph, or I guess the chart on the right side, which I'm going to talk about it shortly. In terms of political issues or slash risks, the government hasn't been very stable in the past couple of years, many elections and all of that, but it's pretty manageable. And it doesn't necessarily, I guess, scare off a foreign company that wants to invest in Israel. It is manageable, and Israel is very welcoming to foreign companies. And as for countries risk, we're talking about the Middle East, which I guess is a kind of like less safe region, but it also manageable thanks to the IDF, the Israeli Defense Forces. And as for the currency exchange rate risks, almost non-existent when compared with the US dollar. We saw it earlier with the scatter plot and the red line. So the exchange rate has been pretty much the same or constant, not many fluctuations, at least not many extreme fluctuations, which is a good sign. And as for the country's debt ratio, it was lower than that of many OECD countries, so the most developed countries in the world, and that was in 2010, but it is relatively lower than some of OECD countries nowadays. So Israel debt ratio is 73.1% in 2020, which is even lower than that one on the right side. So over the years, the debt ratio of the country has decreased, which is a good sign. And another thing is high cost of living. Israel is among the most expensive countries in the world, so it could be a risk because it can cost a lot of money to conduct businesses in Israel, and maybe because it's a very expensive country, maybe the consumers are careful. Even though they like spending money, maybe they are careful. Before making a decision, there are a couple of things that we need to consider. US corporate tax is 21%, whereas Israel's corporate tax is 23%. So it's basically higher than that in the US. There are some withholding tax. So dividends withholding tax is 25%, and royalties withholding tax is 15%. No branch remittance tax. So it's pretty much a good thing. You don't need to pay about on your remittance earnings. So it's a positive thing. And recommendations. So basically, recommendations really depends on the country and the industry in which it conducts businesses, and I'll talk about it shortly. We need to be aware of the inflation rate in Israel, which has been roughly 1%. Sometimes it's even negative or even below 1%, which is not that good. Right. The inflation has been pretty much stable and constant around 1%, but the US targeted inflation rate is 2%, and the Israel's inflation rate is almost 1%. Now, inflation in a way, to some extent, is good for the economy because it stimulates the economy grows, the economy is more productive. There are things that are going on. But when inflation rate is so small or even negative, when we're talking about deflation, the economy is in a way stuck. So Israel is in a situation where the inflation rate, although constant and relatively stable, is not as high as to stimulate the economy, but it still has a good economy, generally speaking. We need to also consider the country size, both economic and population wise. So economic wise, it's a small country, small economy. It's not very influential or strong, although it still has a stable economy. And also when we're talking about population wise and those two things combined, economy and population, obviously profits that could be generated in a larger country, let's say in China, may be more benefiting to a foreign country as opposed to revenues generated in Israel because the population is pretty small, not many people, and it's also very expensive to produce or manufacture things in Israel or conduct businesses in Israel. So really also something that we need to be aware of. But the most important thing, and this is what I show on the right side, those two pictures, is that Israel has a great and advanced human capital. It's one of the most educated countries in the world, I think top 10. So people are very knowledgeable, are skilled, they know what they do. And it's something that if a foreign company that is in the business of something very expensive, let's say in the industry of technology, high tech, healthcare, military, those industries are really expensive to begin with. So if a company conducts businesses in one of those industries, it might as well invest slightly more and acquire better capital, more knowledge, more skills, more tools that will enable that company to grow more, develop more, and even earn more profits. And when it comes to this, Israel is one of those leading uh, countries that is very invested in terms of high-tech, healthcare, military, technology, and so on. So this is a good thing about Israel and really depends on the industry, as I said. These are some references. And I really want to thank you for watching my video, my presentation. I hope you learned something new. I believe Israel is a good venture, business venture, especially when we talk about industries such as the healthcare industry, military industry, high-tech and technology industries, those industries in which Israel has a lot to offer, good and great human capital, people are knowledgeable and they know what they do. Obviously, it's a slightly expensive country. The inflation rate, while stable, is relatively low. So sometimes the economy can be a little bit slow and stuck. But overall, Israel is a good country to invest in. So thank you so much for watching, and I appreciate you for that. Bye bye.